So we have this very cool role. It's very overdone, I'm sure, in crypto, but it's called chat trader role, right? And so if you're a chat, you're pretty much like creme de la creme Avantis trader, right? We've proven that. You've proven that in the Discord. We've seen your stats on the trading platform. Um, if you place in the top 5 in the weekly leaderboards on P&L or volume, you automatically become a Chad. And then Chads get a special lounge called the Traders Lounge, right? And so traders in the general channel are seeing that there's a lot of alpha being posted in the lounge, and so they want to be part of the lounge. So that creates this sort of synergistic ecosystem where we're able to motivate traders to do their best, and then also create this like organic community.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions. Enjoy the episode and like and subscribe.
Welcome back, everybody. We've been joined by the CEO. He calls himself the janitor, but clearly the CEO of Avantis. Sehaj. Avantis is a DEX, perps DEX, but there's a whole lot of twists and turns in this one, which we'll obviously unpack. Welcome, sir. It's an absolute pleasure to finally meet you, but more importantly, to spend some time, because I know that you're super busy. Welcome.
GM, and thanks, Jedi. Great to be here.
Great, man. So just jumping straight into it, just a brief intro in terms of like who you are and, how the hell did you find yourself in the depths of DeFi and on base, and having built this thing that's actually quite a beautiful product that you guys have built. Yeah, give us an intro in terms of where you're from and the journey that you've taken.
Yeah, for sure. Another way to put the question is, what went wrong? Why am I in the depths of hell with you? What went wrong in my life? No, no. But I was just I graduated from Berkeley in 2020. I started working in investment banking. I think the short story of how I got into crypto is bought Ethereum at the local top, which was about I think 4,000 at the time.
I think we all do that, so don't worry about it.
In 2021, so definitely very late to the game compared to the crypto OGs. But I only bought it because while in investment banking, I could not buy any other thing, right? I could not buy stocks, I could not buy bonds, so I had to dabble in crypto. Bought it, rode it all the way down to negative 70%, and I was like, wait, let me read up on what Ethereum really is and not just buy into the hype. Read up on Ethereum, put some money into my MetaMask, which I installed, used Aave, and then I was just enamored. I was like, this is insane. I can just lend money to anyone in the world and they can borrow it. This is pretty crazy. So went in full time, started my career in crypto, working at Illuvium, which is a gaming company. Was working with the Warwick brothers. Really learned a lot from them from a game theory DeFi perspective. They're very smart folks. Then started working at Pantera, which is a crypto VC based out of US. Was there for a year and a half as an investment associate, focused on DeFi, gaming, NFT infrastructure. That's when I kind of discovered perps, right? So we led this deal internally for derivatives on Solana. And I recognize the market, obviously, everyone knows this now, the market gap is pretty massive between the centralized exchanges and the decentralized perp exchanges. I think another thing I really like coming from TradFi, investment banking, finance, is that, look, there's cash flows, there's tangible metrics you can track. And I believe that, as a founder, if I start something, it'd be in a space where there's a massive market gap, right? There's a massive market need, and there's obviously financials and fundamentals backing that space. So in June, I decided to take the plunge to build full time. That's around the time when Base was also coming up with their own L2, or Coinbase was coming up with Base, which is the L2. That really excited me because that to me clicked the 100x gap, right? Which chain can bring on 100x users from now, 100x retail flow, more distribution, and what company is willing to put it all at stake to cannibalize their own business? It's definitely Coinbase, right? And this is a bet we took last year with Avantis. We also obviously recognize a lot of inefficiencies and improvements we can make to the current perp DEX model while being fully on-chain and following the ethos of the space. So that's at a high level, that's the journey, and that's what led me to building Avantis with my co-founder.
I mean, there's a lot to unpack there. I mean, it's the thing is that it's almost like perps, dexes, and dexes have become very generic, and it's kind of like, but when I speak to you, I mean, I know that because we obviously have written about you guys, and I've read the content and the rest of it, and it's kind of like, well, I know that you guys are a Dex, but at the same time, I know that there's a whole lot of stuff that you guys have done differently, which we will unpack in this interview. But it's almost like, yes, you guys are another perps Dex, but you guys have gone about things quite differently. And now that I've met you, I can see why. So yeah, I mean, it's pretty cool that you have had that perspective, and obviously what's interesting at the moment in the market is that we're seeing a little bit of a resurgence in DeFi. I think it's very subtle. People probably think I'm mad that I'm saying this, but you are right. I think base is key because of Coinbase. I'm just wondering, just before we get into kind of like the details of the protocol that you guys have built, what's it like building on base? I mean, I've never actually asked that question to anyone, but you guys are obviously in it. I mean, I don't want you to kind of give lip service. I'm like just genuinely interested in what it's like to build there versus say somewhere else. I mean, is it the same? Is it different? What's different about it if it is?
It's the same. There's no lip
Yeah.
service. I'll be honest. I mean, we're base backed as well. Coinbase invested in us. Base ecosystem fund invested in us last year. But there's no special treatment. There's no incentives for you to build on base in the sense that, of course, there's incentives from the OP superchain and any OP grants you get. But base is not doing any partiality or favoritism, which is, in my view, awesome. Right? It
Yes.
truly makes them a neutral L2, right? A less evil L2, so to say, right? Versus in other L2s, you see a lot of favoritism, a lot of politics. There's none here. You build something that people want, base will promote you. It's as simple as that. So the experience building is the same as any other EVM. Of course, we have dedicated Discord channels for builders. Um, the good part is that we have a very good figurehead with Jesse Pollock, right? Very strong figurehead who is
Yeah.
always pushing the narrative forward, who's always trying to better the on-chain economy, who's not concerned with incentives or who's making money, who's not making money. Simply about driving transaction costs down and building the best developer tooling so people can build whatever the hell they want, right? So that's what I love about Base. I think it's really awesome. They don't have a token. I hope they never have a token.
Yes.
Because then the protocols on building on base actually get more value in and less sort of reliance on less of a crutch, so to say, from incentives.
Yeah. I agree with you. I think in my opinion, I think Arbitrum was perfect the way that it was, and I personally think that the airdrop and the token landed up being a negative from our perspective. I think there's protocols that landed up benefiting hugely that would disagree with me,
Yes.
but I think it was a net negative from a user experience and obviously from a political experience as well. What we've seen play out. Okay, just on to obviously Avantis and the obvious question that I want to ask you is like, what do you believe is kind of like not necessarily wrong, but challenging in the current space? And then the second part of this question is, what did you guys do to kind of like improve upon those issues that you obviously identified in that journey?
Yep, yep. So I think the challenges are many, but I'll boil them down to two sides for market participants, right? Two sides of market participants. One is the LPs and one is the traders, right? That we pretty much built a marketplace for both of them to get them harmoniously interacting with each other, right? And the problem is, how do they interact in harmony? In on-chain perp dexes, LPs are always taking the other side of the traders, right? And so in the sea of thousands of perp dexes, let's eliminate 90% because, well, they get eliminated, right? They blow up. By blowing up, I mean like the LPs lose money, traders don't have capital to borrow because LPs lose money and they leave. And so there's no harmony in the system, right? So number one thing is we wanted to solve for harmony. How do you do that? You have incentives that ensure that traders themselves want to make sure the LPs are protected, right? So they're working as partners, not as competitors against each other. That's the most important thing, to scale a perp dex into the, like GMX has done, or Gains has done. Kudos to both those teams, amazing teams, where you scale the perp dex into millions and millions of dollars of liquidity, composability, partnerships. Before doing that, you need liquidity. You need to make sure LPs are paid well, they're compensated well for the risk that they take by being counterparties. So we introduced a very interesting incentive, which, I mean, at the time or even now, nobody has done it. It's called loss protection. And so it's an incentive for hedgers as well as contrarian traders to take the other side of market and get pretty much a rebate on their losses, right? So if you're a trader who simply wants to go short Sol, and the skew on Avantis for Sol is long biased, and you're going short, you'll get 20% off on your losses in case there's any, right? So as a directional trader, you're happy. You got 20% back, you have a 20% edge compared to others in the market. It's insurance, right? Everyone knows loss aversion. Losses feel worse than profits feel good. So that's one side of the story. The other is that a lot of market makers, arbitragers, effectively a lot of institutions like to be delta neutral. So they'll take a trade on Avantis, go short, go long elsewhere, and effectively pocket the spread. So it's a new way to basically do funding rate arbitrage, and that's how LPs stay protected, right? So that's one core innovation that I think doesn't exist anywhere else. That's meant more for traders, but also helps LPs, right? It creates this harmony. It eliminates competition and sort of bad actors. The second thing we saw is that, look, there's a very limited selection of assets on these on-chain perp dexes, the ones that are fully on-chain using BAMMs. Um, and that's because, obviously, again, they don't have the right risk parameters, or they don't have the right Oracle feeds to get these assets listed. For us, we have about 50 plus assets. And the best part is it's cross asset leverage. So you can trade all kinds of assets in one go, in one terminal, right? Whether that's crypto, whether that's Forex, metals, in the future, stuff like oil, stuff like, orange juice futures, really cool stuff that TradFi people love and on-chain people haven't been exposed to, even though the volatility in these assets is worth looking at when you add leverage on top of it. So that's sort of the key innovations for Avantis, right? Like making sure LPs get a lot of flexibility. They can choose their own risk profiles. They can lock their capital. At the same time, they're delta neutral. Traders get loss protection. Traders get access to all of different asset classes. Um, and of course, depending on how you feel about base, like exposure to base as well.
So I mean, just this once again, there's a ton to obviously unpack there. I'm really interested in jumping right in terms of like bringing the real world asset side of things on chain. Like from a regulatory perspective, I mean, that's obviously been a big thing. We saw it in the early days of Arbitrum. Guys tried to do it. There were a couple of interesting protocols, but it never really took off because for some reason there wasn't kind of like regulatory approval. How have you guys kind of like addressed, I mean, that as a starting point?
Yeah, I'll say two things, right? Number one is that regulatory approval never stopped PMF in crypto. It never has. I think it never will, right? For obvious reasons. But I think the second thing we'll say is that, look, we don't offer the product in the US, UK, Canada, sanctioned countries, right? OFAC sanctioned countries. People should not be using Avantis from those countries. We try our best to make sure we block those countries as well. So, definitely in the other countries, it is allowed, right? And I think that another reason why a lot, as you said, Arbitrum protocols tried doing it, I actually think if you look at Gains Network, they're doing a phenomenal job of it. You see a lot of real world asset traders on Gains. About 30% of their volumes actually come from Forex. Nobody talks about it because everyone talks about RWA as like
Yes.
tokenization of the US Treasury via a stable coin that you can hold in your crypto wallet, right? It's almost like let's bring the baseline, which already exists in TradFi, into DeFi. Well, good,
Yes.
but what beyond this, right? The reason why those protocols did not take off, in my view, is you're not parameterizing the assets correctly, right? You're either undercharging or overcharging. You undercharge, LPs get wrecked. You overcharge, no trader will want to come to your platform and trade. In our team, we have had someone who has been trading rates for 10 years. He was VP at Deutsche, trading rates, and this person has set up pretty much all the parameters around pricing volatility correctly. That's very important, right? If you're listing an altcoin on the platform that moves about 5% in a day, right? You can't charge less for it. You have to charge more for it. Right? If you're, on the other hand, if you're listing a Forex asset that moves only 10 bips in a day, right? The standard deviation is only 10 bips or 20 bips, then you charge lesser for it, right? You also do a lot of BD, a lot of like marketing that brings these people in, right? At the end of the day, no protocol is self-functioning. There's a team behind every protocol, and that's the same with Avantis, right? We're trying our best to bring real-world asset traders onto base, and that's a long journey, but we're seeing the benefits play out.
Yeah, I think I didn't actually know that about the protocol. So because I've been scratching my head and it's like, well, I'd really like to, explore the possibility of trading on chain, those assets that we don't normally do. And it's, like one of them, I know that like gold is a big one. When gold moves, it's a great one to trade. I don't know if that's something you guys offer,
We have,
but
yeah.
yeah, it's a big one, and there's a lot of great traders who talk about it a lot. Like I know I've got good friends of mine who are very serious traders, and they talk about trading gold, and obviously the indices as well, and currencies, and um, like there was kind of like a little bit of kind of complaint about MUX liquidity wasn't sufficient because it was kind of like cross protocols and the rest of it. Very important question to ask you is obviously kind of like liquidity is everything. And I know that you guys have got some interesting ideas and you thought long and hard about, obviously slippage and liquidity and availability. Yeah, give us kind of like a brief overview, and you're very welcome to go deep into it if you want. Very interested in that.
Yeah, I think I'll keep it simple, right? Ultimately,
Yeah.
traders care about liquidity and having deep liquidity. I'm sure your friends will not trade on Avantis if they only had like access to small liquidity on any of these pairs. So, small example, yesterday, someone shorted the dollar by going short the USD JPY pair with $1 million in size. And that he was able to do it, right? Did it, closed the trade in 1 day, made 10 grand, right? So, if your traders, if your friends are trading more than $2 million in size, yes, we are small, but I find that a lot of on-chain traders are not trading that much in one
Yes.
go on perps. So for the moment, we're actually underutilizing our liquidity. If I had to be super honest, right? We have about 15 million in TVL, which we've capped. Capped meaning obviously we don't accept more capital because we don't want to dilute yield for existing LPs. So of that 15 million, the open interest is always hovering around anywhere between 3 to 5 million. So only 30% of the available liquidity is actually utilized. And so we welcome all traders, right, to push the limits. We actually want to utilize this to more than 60%, do about 3, 4 times the volume that we have a TVL in. So if we have 15 mil TVL, we want to do like 30, 40 mil volume at least. Um, right now hovering at about 10, 15. Again, I think main reason is we don't have the kind of incentives to throw out that other protocols do,
Yes.
whether that's in Arbitrum tokens or their own native tokens, right? We do have an XP program, but that doesn't mean much. Obviously, not very tangible. We do also recycle all of our fees back. So any trader trading on Avantis should know that like we take 0% fees. We take the fees, we recycle it back to traders based on their volume. So right now the growth goal is like give everything back to the community, grow a lot, grow liquidity, become the number one protocol on base by TVL, by volumes, and become the most deep and liquid venue for trading all kinds of assets and perpetuals on them. So that's sort of the roadmap goal and how we think about liquidity now versus 6 months from now.
So, I mean, in terms of like your position right now in the market, specifically with base, are you guys first to market in terms of the kind of product that you guys are offering, or is there kind of like an effective competition? So you are the first, right?
So look, Synthetics is an OG. A lot of respect to the team,
Yes.
right? They've been building for like 3 years, and the original vision of Synthetics was let's bring synthetic assets on chain via a synthetic stablecoin that trades against an oracle, right? So they actually pioneered the concept. I think they are a competitor, obviously, right? Number one, they're on base as well via Quenta and via the other aggregators, front ends. Number two, they have tons of money to give out, so hard to compete on just incentives. But I think
Yes.
where we outshine them is OI on these assets that we're talking about, real assets, right? Again,
Yeah.
this is a protocol with 5 times the liquidity, 5 times the incentives, right? 10, I mean, the market cap is not comparable because we're not even live. So that's a joke, but they're massive. They're very well respected, trusted. Um, so again, the begs the question, right? Competitors, but we're first in class in terms of our focus on cross asset leverage and creating a new form of arbitrage and incentives on base, right? Whether that's loss protection, whether that's the positive slippage that we give out to traders to counterbalance pools, whether that's like the focus on RWA trading and making sure we're parameterizing it competitively while thinking about LP security. I think that makes us first in class. I would say Gains on Arbitrum has done a very fantastic job of it as well. Really respect the team. I hear it's like one single dev that started it out, and now they finally hired people,
Yeah.
which is insane to me. That's crazy.
Yeah.
Yeah.
So, I mean, just in terms, I mean, obviously one of the biggest the biggest aspects of, or biggest challenges in kind of like the context of DeFi is getting users into the space? And I mean, obviously the big draw card with Coinbase is the fact that they've got this new wallet that's kind of like bridges that divide really easily. Do you guys have an integration into that wallet that allows for kind of like a seamless integration? So that exists at the moment, and it's easy. It's easy for people to kind of access. Just talk us through that whole process. I mean, was it something that you guys spent a lot of time on, or was it kind of like it was like a plug and play scenario?
Yeah, so I'll answer the last question first. It's a plug and play scenario. There are some modifications you have to do to the SDK to get it working, but overall, they've done a fantastic job. Kudos to Coinbase on the smart wallet launch, very seamless launch as well. For all of our traders or people listening, we do have $15,000 in gas credits from Coinbase. So if you use a Coinbase wallet on Avantis, your gas will be sponsored completely, right?
Nice.
Do note you'll still need some ETH for trading, but gas itself is taken care of. You don't need to pay anything on gas, open, close trades, modified trades, nothing at all. Somehow, I mean, it's funny, Jedi, we've not seen the uptake be very high, even though we're sponsoring the gas, because I think it's because gas is super low on base at the end of the day, 1 cent, 2 cent per trade. So people don't want to change the existing setups and try something new. But I think if a new person comes in and they click on create wallet, and in the top right section of Avantis, they'll be going straight to Coinbase Smart Wallet Flow. So if they're a Coinbase user across the world, they can fund their wallet using Coinbase Pay, which is also something we've integrated, and they can get started on Avantis without having any knowledge of seed phrases or whatever, which is pretty cool.
Where do you guys see your kind of like primary targets customer? I mean, is it kind of like your traditional retail? Is it institutional? Is it kind of like a combination of the two? I mean, when you guys sit and strategize, like who are you looking towards? I mean, is it purely the DGens? Is it purely, I mean, where would you like to see kind of like your playing field?
Yeah, I think, look, we're degens, we love degens. That's our main focus, right? Always. I think base native or even EVM native cross chain traders, trying to get them onboarded, show them what we've got. That's the main audience. And let's be honest, without degens, without retail, no institution will be interested in taking the other side and being a counterparty and doing like all this hedging and arbitrage, right? Because without them, that arbitrage doesn't exist also. I think retail is the most important audience for us. Retail degens on base, obviously, right? People trying to genuinely express a view on Avantis, on the platform. We see this, and whenever someone is actually trading genuinely and not just like wash trading or like opening closing trades, like not just farming, it puts a smile on my face, because we have a lot of people in Discord saying, "Hey, Avantis is the first time I've used the perps product and I made money on it, and now onboarded into perps." That's what I live for, right? That's the shit I build for. So I think audience is very much the degens on base, degens across the EVM space. Would love to onboard Solana traders, but I think the bridging process and the onboarding is very hard. People are very native to the ecosystem that they're on. But that's sort of the audience.
Yeah, that's awesome. I mean, I think it's super important that you are mindful, obviously, of like, the product that you're putting out there, and more importantly, the people that are coming to use it. Community side of things. I mean, that's obviously one of the most important parts of crypto. I mean, you probably know that better than I do. How has that been like? Because you are ultimately like a hardcore business as a DEX, and you don't generally see that kind of thing. But I have noticed, like in your Discord, there's a good vibe there. Like there is a sense of community. But what I find really interesting about it is that there isn't really much talk of token, and there isn't much talk, and obviously based on your comments around like they should never have launched a token, like on the Arbitrum side of things. I mean, how did you guys manage to do that? I mean, is that just kind of like being continuously involved in the process? What would you say has been kind of like the secret to your success around community?
I think we have a long way to go in terms of success. I don't think we're successful yet in terms of community. I think like our initial success in terms of bootstrapping has been by focusing on like the core platform KPIs, right? So like if you're onboarding LPs, show them their earnings, right? Show them what they're earning, tell them how they're earning it, educate them, right? If you're onboarding traders, show them what they're making, ask them to share their portfolio share cards, ask them to share their trade alpha, give them nice roles in the Discord if they're active. So we have this very cool role. It's very overdone, I'm sure, in crypto, but it's called chat trader role, right? And so if you're a chat, you're pretty much like creme de la creme Avantis trader, right? We've proven that. You've proven that in the Discord. We've seen your stats on the trading platform. If you place in the top 5 in the weekly leaderboards on P&L or volume, you automatically become a Chad. And then Chads get a special lounge called the Traders Lounge, right? And so traders in the general channel are seeing that there's a lot of alpha being posted in the lounge, and so they want to be part of the lounge. So that creates this sort of synergistic ecosystem where we're able to motivate traders to do their best, and then also create this like organic community where people are not talking about like the token, because there is none, thank God, right
Yes.
now. I can't imagine life after a token, if there will be one. So it's interesting.
Yeah, I mean, I find that, I mean, I've said this many times before, and if you have watched any of our streams, and kind of like, I always have said, like, if there's an opportunity to not have a token, I would much rather there isn't a token, and maybe find another way to kind of like reward community and all that kind of stuff. And it's like, I think there's a whole set of problems and challenges that come with a token, as you know. But it seems like there is a possibility. And I mean, why would you have a token? Like, now that you found a product market fit and you've figured out a whole lot of stuff, and I'm going to ask you about kind of like what you see as, like an ideal scenario for you guys. I
Hmm.
mean, in what scenario do you see a token playing a part?
Look, I think the reality of the space is that I think you do need a token in the sense that it unlocks like incentive value for your users and for your protocol. And so it's almost like, why does a company go public, right? You unlock like capital, you're able to coordinate participants better, you're able to align in like the shareholders of the company, the stakeholders of the company. In crypto, you take it a step further because the stakeholders are also the shareholders, meaning your customers are also the holders of the company's sort of equity, right? Quote unquote. So I think it's important, it's needed, but I think not before you can genuinely operate the product without a token, right? I think the token is supposed to be supercharging the product. So you find PMF, you launch a token, and then you find PMTF, product market token fit, right? Where everything is working in a triangle. Your token holders, stakeholders, product holders, customers, community are all aligned by this one instrument. So I think, look, we are excited about it. I think the when is uncertain. We do have an XP program, but I think at the end of the day, our PMF should not be because people want to own the token. It should be in part because of that, for sure, because that aligns community expectations. But it should be mostly because we built something solid that people want to use that is just not there in the space, right? And to me, that's like the RWA trading aspect. To me, that's the LP rewards. To me, that's the loss protection, like all those types of novel incentives that we've introduced is the reason why I'm excited, and the token should supercharge those things. That's it.
Yeah, I think that's exactly the way that it should be. And is it a dynamic of kind of like, well, we're generating fees, you stake our token? It is that dynamic, right? I mean, that's what you're talking about. It's kind of like, we'll reward you if you stay loyal to the cause that is our token. I mean, that's what real yield is. I mean, that's what you're talking about. Am I correct?
So potentially, right? But I think the main thing could also be that there's a work token where like you stake it and you're pretty much acting as a insurance fund, right? Which backstops like the source of liquidity in the protocol, which is the LPs, right? So it could be one of many things, right? Obviously, we haven't finalized any of those things, or even the fact that there will be a token. But just thinking about the structures, you can do a lot of innovative stuff, but you have to make sure that everybody's aligned on that innovation. It should not just be a plain vanilla outflow of fees to stakers. I think that's not really worked out well, to be honest. Like buyback burns, token revenue staking hasn't really worked out as well as we expect. Maybe the market is overlooking fundamentals. Maybe the market does not care about revenue share. Um, Aave just, the proposal to turn on the fee switch has gotten a lot of good reception. But if they do that, like at the end of the day, someone is not getting the revenues. Suppliers of capital are not getting the revenues. Um, and the token might start getting pegged to the revenue is going to the token holders, which at the end of the day is needed in the space. But I think again, it's too, and this is Aave we're talking about. Aave is a genuinely mature, large, cross-chain, well-tested, proven team protocol, right? So any protocol doing revenue share early has to be very careful, not just on the regulatory side, but just on the side that, look, you need a treasury to grow, right? If you're giving all away, first of all, are people valuing it? Second of all, do you have enough in your war chest to keep going, right? To pay your developers to keep going, to expand aggressively, whether that's cross chain or like building new products. So I'm not sure how it ends up looking for us and when it ends up looking like
Yeah.
that for us, but I think certainly, I mean, that's where the space should be headed, because without fundamental investing, we're doomed, right? So,
I mean, we've saw the success of GMX and GLP and how they've managed to obviously, leverage that relationship,
yep,
around, and I think there's a lot of valuable lessons. I think, I think there were mistakes that were made. Not necessarily that wallets they controlled, obviously not the case, but it was like, how do we get to that point? And it was quite, I think initially it was just a very complicated thing that once people understood,
mm-hmm.
it was a success, right? And I think now it's like, okay, well, where do we go from this point onwards? And I'm just curious, like, have you guys thought about kind of like creative and different ways of incentivizing users? I mean, is that something that's kind of like on your agenda beyond just kind of like a straight, revenue share thing? I mean, is there room for that kind of creativity?
Absolutely. I think, look, in any trading platform, you can have like, incentives that go beyond revenue share, right? Like you can have, for example, for traders, we can have ambassadors, right, who are truly just like, making good content about Avantis, like posting their trades, are genuinely strong on-chain traders who are creating awareness. And then from that perspective, you can give them more XP, or you can pretty much like give them a higher referral rebate. So you're getting increasing revenue share, but not from your own protocol treasury. You're kind of like increasing revenue share from their own activities, right? They are referring traders, they're getting their rebates, they're getting more XP, they're getting more vested as a stakeholder in Avantis protocol, right? So there's definitely creative ways of doing it, and we're exploring it for sure.
So what does your ideal product look like? So if you look kind of like into the future and,
Yep.
what does it look like in your mind?
Yep. So close my eyes, open them. It's like 2025, right? Same time right now. August. We have 50 million to 100 million in TVL on base. Um, that's in a combination of USDC, yield-bearing stablecoins, Ethereum. That's on the liquidity side, supply side. On the counterparty side, we have a bunch of different cool products, right? We're already working on new types of derivatives that haven't been seen before in the space. So right now, these LPs are powering perps. In the future, they power options, zero-day options, no-fee perpetuals, all kinds of cool products. And so you build this composable ecosystem of derivatives on the same base of liquidity on base. That's sort of the vision for us, right? Like create like a composable ecosystem of on-chain derivatives, starting with perpetuals. Perpetuals have the biggest PMF. Naturally, we want to start there. We want to remain cross asset. So like whatever products we do launch, we want to have Bitcoin, ETH, sure. We also want to have a real world asset to show that it can be done. So I think like long term, that's the vision. Build out liquidity, focus on like building the biggest liquidity on base, and then also focus on creating products that genuinely haven't been seen before. And I can't tease too much because we're doing a lot of research on this for our next protocol audit. But I'm pretty excited to like go through it and then announce a product that will pretty much allow you to trade perps without paying anything, right? While being economical for LPs. So that's just a tease, but I think pretty excited for a lot of the new demand side products that we're working on.
Are you, I mean, in terms of the traditional finance products that you would find out in the traditional finance, which ones are you guys currently doing on the platform?
So, I mean, CFDs are like obviously pretty common, right? Contract for differences. We call it perpetuals, leverage trading, whatever you want to call it. It's the same thing. Those are very common. I think they differ from TradFi brokers in a lot of ways because we don't have minimums. People can trade any amounts they want. The fee structures are better. There's incentives. But I think in the options world, right, the zero-day options on like Bitcoin, ETH, they haven't really been introduced in DeFi in a meaningful way. I think like that's another product we're thinking of. Same thing for like Forex as well, right? Generally these products are better for more volatile instruments, so I would exclude Forex from like a 0-day option product, but definitely vanilla options on like, different blue chip Forex would be pretty cool.
Right. So there's clearly a plan in place. You guys have obviously spent a lot of time and effort building this thing. For those of you who are listening or who and are watching, just check the link down below the video. We'll put a link to the website and just go check it out. I think from a user interface, it's pretty seamless. I honestly don't think there's much of a difference, if any, between your traditional central exchange. You might as well be on a central exchange. I mean, obviously, that's an important part of this whole kind of like offering is like, how did you guys go about that? Was it like an easy process? Was it a mission? I'm sure it was a mission, but I mean, obviously working on base fast. I mean, have there been challenges around that? Tell us a bit about that experience.
Yeah, I think, look, I came into the space pretty starry eyed, right? Thinking about decentralization of everything, right? Healthcare, supply chain. I was reading A16Z, fresh off the press, new grad. When I started building on chain, then you realize, that the problems actually compound. So there's a popular saying in the blockchain community that I'm a developer, I have a problem. I'm building on the blockchain, now I have two problems, right? So it's definitely hard regardless of which chain you pick, because a lot of the architecture, latency, trust assumptions, like the infrastructure around data, very complicated on chain versus off chain, which is why you see a lot of like order books be blazing fast, but then you have to like trust a lot of the order matching happening off chain and trust the market makers to give you the right code. So I think it's been challenging for sure. And every time we scope out a roadmap, it's an audit, right? So we have to plan it very carefully on like, okay, what do we want in this audit? We're going to pay a lot for this audit. It's a security risk. What do we want to change? Why do we want to change this stuff? Those concerns don't exist in the Web2 world as much, right? So is it challenging? Yes, but it's rewarding because you're pretty much creating like you're not sacrificing on composability, right? That's something that is non-negotiable for us. Like our USDC in the vault should be able to travel anywhere on chain, should be yield bearing. Our traders should know the exact price at which that trade will be executed. It should be executed by a keeper on chain. So those things do matter to us, and so the sacrifices are probably worth it for that.
So I think what's really cool chatting to you is it's like there's the reality check, right? It's kind of like this is the reality of what you're dealing with, and
Yeah,
and then obviously the reward on the back of it is great. I mean, what I really enjoy about Web3 is the sense of community. Is kind of like, because we're online, it's kind of like you're forced to find your tribe, and if you do it right as a protocol, you can get that positive momentum around it. I think in terms of just wrapping things up, give us kind of like a bit of an overview in terms of what you guys have got planned for like the next 6 to 12 months. I mean, I think you did give us a little bit of a, these are the goals you guys want, but what does your roadmap look like for the next
yeah.
6 to 12 months?
Yep. So season one of XP, which is our native points program, which we've spent a lot of time crafting, is already live. So that will end in December, sort of culminating into our next phase of decentralization, hopefully in January. So that's the biggest thing that's coming up from an event perspective in the next 6 months. But I think from a product roadmap perspective, we're rolling out a lot of improvements. We're onboarding market makers. We're increasing liquidity and improving fees for traders. So if you're trading on Avantis already, you should see fees go down by 50% in the next 3 months. And LPs will still have the same level of economic feasibility, right? So that's only possible with the current architecture and the BD efforts we're doing in the next 3 months. Um, Obviously, I think besides listing new assets, we're going for a audit at the end of August. This is more of a maintenance audit because we haven't had one in the last 5 months while we're making changes on the fly. But also, we're very excited to introduce a new form of perpetual called a no fee perpetual. So you only pay when you win. You enter a trade, you pay no open fees. You exit a trade, you pay no close fees. You pay minimal to no slippage, right? And then you only pay on a fraction of your earnings if there's any, right? So think of it as a
Yeah.
as a lossless, trade almost.
Yeah.
and especially if you hedge on the other side. So very cool, hasn't been done before. Working a lot on the economics and the smart contract implementation for that. Expect that to go live end of the year. And I think yeah, besides that, we will keep researching the space and have a lot of community initiatives. So join our Discord if you're a genuine trader, on-chain trader, whether that's in Avantis or not. We definitely will take care of on-chain traders, and have a lot of surprises lined up in the Discord that I can't reveal.
Cool. Yeah, well done. I think it's like I said. I mean, I have had kind of like a sneak preview of your community, and yeah, there's definitely a good vibe there. Yeah, check them out, guys. Yeah, these are real builders building real products. They're not here. Yeah, I see you guys doing some cool stuff in the future. Been an absolute pleasure to have you on, and yeah, it's been a bit of a breath of fresh air in light of the fact that it's just been memes and a bit of mayhem, and it's really cool to speak to builders who are on a mission. And yeah, I wish you guys all the best, and yeah, hopefully we can get you guys on in the future and yeah, see how you guys are doing. And yeah, I really appreciate your time.
Awesome. Thanks, Jedi. Appreciate it, man.
Yeah, thanks to everyone for joining in and listening in or watching. Please like and subscribe. It's always appreciated. And yeah, we'll see you guys next time. Take it easy.
All right, thanks for listening. If you enjoyed the show, please give us a like, subscribe, and turn the notification bell on for next time. See ya.